What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with my friend Hutch. How you doing today, Hutch?
I am thriving, my man.
Excellent, excellent. It's bright and early out in Hawaii, so I appreciate you joining and being bright-eyed and bushy-tailed, but I got some great news for you. Right, exactly. The great news is it's not just you today. We are also joined by my very favorite member of the audience. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate players. That means deal sponsors. It means investors, buyers, sellers, syndicators, all that kind of stuff. And you may ask yourself, why would you do that? And the answer is, if you've ever heard of off-market deals, those are the private ones that you're not allowed to publicly discuss. You should know that the SEC requires that you have documentation of your prior substantive relationship, or else the SEC will get ants in their pants, and nobody wants that. It's a house of cards. It's really, really bad news. So that's what I'm up to. I'm getting that documentation. And the benefit for you is you will learn how to more effectively communicate on the subject of a commercial real estate deal, and you'll understand how my guest fits into those deals. But before we get too excited about real estate, Hutch, do you want to say a thing or two about yourself?
Yes, sir. So I'm still active duty in the Marine Corps. Been doing that. Been a part of this professional gun club for a little bit over 25 years, and still going. Right. I'm still having fun. Still serving this great country. Also, still training. Still having a good, rewarding, good fulfillment of training the future generation to take over the security of this great nation.
I
Iraq.
love it. I love it. And of course, like I always enjoy talking to you, especially because you're so open about sharing, Jamaican patois and,
Yeah,
giving
man.
everybody like a wagwan, all that kind of stuff. That's really awesome.
Wagwan.
Exactly. All right. So the first section that we always do in these chance encounters, it's the motivation section. Before that, I got to say, but wait, check your eight. And Hutch, I don't know if you can see through the camera and down there, the audience is five, but there might be this hideous subscribe button down there, and maybe they should, like do something about, okay, it's a stupid joke, but whatever. I always do it. It shows up in the metrics. It makes a difference. But let's talk about motivations. Now, by this point, I've had over 300 of these interviews, and there's been at least 1,000 different commercial real estate players that I've spoken to in the past. And it's important for us to know what each other's motivations are, because these deals take months to close. There are plenty of risks involved. They take years to go full cycle. So it's important to know what exactly is going to keep somebody from throwing in the towel when the going gets tough. So
Right.
even though everybody has their own unique why, I find they fit pretty neatly into these five different motivations. So I go through them in every episode. The first one of which is preservation of purchasing power. What's that? Some people, they don't have to have a job. They don't need a W-2. They're work optional. And the way that they pay their bills is from the proceeds of ownership. They have a portfolio of assets, and whatever profits come from those, that's what they use to pay their bills. And you might wonder, if somebody's already in that situation, why would they go through the hassle of another acquisition? Well, there's a couple scenarios that stand out. The first one is when inflation rears its ugly head, that eats away from the purchasing power of your cash flow, so it'll be time to make a new acquisition. The other time is if there's a steep discount because of distress in the property or an asset crash, something like that, then that'll be enough to make somebody in this situation pull the trigger and make that new acquisition. But of course, everybody should be trying to buy at a steep discount, because that protects your investment in the first place. But full disclosure, I'm not that far in my commercial real estate career yet. What describes me much better is trading time directly for wealth. And that's because I got a background in tech. And specifically, it's the CRM industry. I was doing well for myself when we were doing all these online transactions, sending between 5 and 7 million emails a month, especially when I started working for a real estate firm in 2014 for a guy who was flipping 10 houses, doing 10 single family transactions every single month like clockwork for years before he hired me. And when I saw him making money hand over fist, and I saw my tax bill increasing as I went for ever bigger salaries, it hit me that I really ought to pivot to where I'm being rewarded in these slivers of equity, this deployed capital, instead of higher salary, because that just goes off to the government in the form of taxes. So that's what I'm up to. And I know that's too subtle for some people, too abstract, especially for youngsters. What's more frequent for people in commercial real estate who are on the younger side, they are looking to hustle like crazy right now so that they can fast track their retirement, or at least they're looking to take control of their schedule. So it might mean just working fewer months per year or fewer weeks per month or something like that. But the other thing to keep in mind when it comes to this particular motivation is I find that a lot of people who are eager to fast track their retirement, they think that it's universal, and people are just in various levels of hiding the fact that they want to retire. But I assure you, it is not universal. There are some people who are fueled by ambition. They want to buy their entire hometown. They are after that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And that's why they're making their acquisitions. And even though this is vilified in some circles, that sort of ambition, the fact is you need people who are not going to throw in the towel when the going gets tough. And these people are going to hustle into their 90s. So they're fantastic to partner with. Just like the last group, though, but their focus isn't so much their own generational wealth, but they have picked a sector of society, or maybe it's animals, maybe it's the environment, who knows what it is, but they figured out that there's a financial component to making a really big impact, and that's why they're making their acquisitions. So Hutch, as far as those 5 different motivations, what combination of them would you say describes you best?
Yeah. So as you know, I was born and raised in Jamaica, right? So when I look at the measurement from which I came, right, it's a pretty far distance, and then that gives me a life of fulfillment, and I feel good about coming from what used to be a coffee slave plantation to working my butt off with some amazing people, right? And those amazing people helped me to become a part of the top 2% of people in the Marine Corps who have worn the rank of E9 or Master Gunnery Sergeant. So that is a good life and a good measurement for me. So when you look into after 20 plus years of service, right, I've developed a a deep appreciation for our veterans, right? And as I drew closer towards my retirement, Athena and I we sat down and we talked about, what does the future look like after retiring from the Marine Corps? Because look, we can retire after 20 years, right? But after 30 years, we have to retire or transition from the military, you know? So about 19 and a half years, Athena and I we sat down, we talk about what is after what does retiring from the military look like? And we realized that there's certain things that I'm passionate about. And Athena made the comments that raised the awareness in me and said, look, she can see me retiring from the military on a Saturday morning, dressed up in my uniform and sitting there in the living room. So it was clear that, okay, I'm really passionate about the Marine Corps, and I needed to find something else that I was also passionate about, and real estate filled that void for me, right? So yeah, we've been buying and selling real estate for a while, living, fixing and flip, myself as a real estate agent as well. And she listened to my aspiration of wanting to become an investor, which making a full transition into multifamily space. So in 2019, we decided to transition into multifamily space. This is just for improving our income, right? But also to fulfill my passion as well. And the more I dive into commercial real estate, apartment investing specifically, we realized that not only are we improving our income, right, and our cash flow, and also our preservation of capital, we have the luxury of helping people. Now, the freedom of purpose is one of the things that we are striving towards, right? So a lot of us, we want time freedom, and retire from the Marine Corps will give me that time freedom, right? Now, having enough passive income along with my retirement from the military would also give me that time freedom, and then we can also have location freedom, right? And of course, freedom of purpose. So time freedom, location freedom, and the freedom of purpose. So the purpose that we want to do, we're committed to bringing alongside our veterans to invest in an apartment complex with us. And at this point right now, 80% of our investors are veteran, and we want to continue giving back to them. So additionally, we're donating 10% of our acquisition fee to nonprofit organization that benefits our veteran. At some point, we will start a nonprofit organization to offset the living condition of transitional veterans.
I love that answer. That's absolutely fantastic. And it's honestly one of my favorite parts about commercial real estate is how you get
Yeah,
the best of so many different professions. They,
right.
they all end up coming to us eventually. And it's really, really fantastic. But of course, it's really easy to talk about motivation and seem overly optimistic, too starry eyed and not all that. But the fact is, every business has risks involved. Commercial real estate is a very mature industry, so it's no different. And if you've ever been involved in one of these off-market deals, these private deals that you're not supposed to publicly discuss, the securities attorney in the mix, then there should have been a securities attorney. If not, like that's the reddest of red flags. You should run, not walk. It's a house of cards because the SEC can shut you down real easily. But the SEC attorney should have insisted that everybody who's a partner, every investor, GP or LP, they should all fill out this financial questionnaire. It's really invasive, questions about like your net worth and stuff like that, stuff that's not so comfortable to answer. Sometimes it's called a suitability questionnaire, but when I got to the question about tolerance for risk assessment, I found that it lacked utility. You can't really take the answers, the possible replies to the bank and know for sure, like, this is what the person's tolerance for risk is. So I made my own question for that, which is a fill in the blanks one. And it goes like this: there are many popular investment asset classes, but I think blank is too risky. So Hutch, it can be inside real estate, it can be outside real estate. What's too risky to you?
There's so many things that come to mind, right? And um, so you and I, we went to a conference recently, and one of the things that we talk about is what's going on in the real estate sector right now, especially commercial real estate, apartment complexes. And one of the things that one of the speaker talk about is turning our investors ensuring that our investors are actual investors and not speculators, right? See, speculators invest with just a hope that they will get a return, right? While investors, they take a calculated risk. And when we build a relationship with our passive investor, what we're talking about is their risk tolerance and their risk capacity, right? And that's different for everyone, right? So in the future, we're going to go into alternative investments where we are bringing more asset class to our investors. But right now, we focus on a multi-family apartment complex. But the one that for me that is a really big risk, and I probably will never do it, and I might miss out on a lot of growth, is really Bitcoin, right? Anything that we can't really control, right? We don't. I don't think the greater part of the population don't understand how that thing works, right? And I don't understand how it works, and I only invest in things that I understand. And apartment complexes and other real estate asset is what I understand. Because look, you get to develop the relationship with the operators who are doing this. You are able to verify their track records, right? You are able to go there, visit the property, right? See it, feel it, touch it. This thing is real. I can invest here, right? You can see the different strings that they can pull on to improve the quality of the asset to ensure that there is a return, right? There's a market fundamental that is verifiable, right? That we can verify as investors, operators, syndicators, right? To identify that what our lead sponsor is talking about makes sense in this market, in the sub market, and in this asset.
Mhm.
So Bitcoin or anything that our operators cannot control is too risky for me.
Yep, I love that answer. Of course, like now for about pushing 10 years, I've been having people telling me about Bitcoin and how it's like, oh, well, I don't understand Bitcoin. It's like, well, I was the CTO of a bank, so I do get Bitcoin, and it's an appreciation move. It's buy
It is,
low,
yeah,
sell high, or else you lose. Full stop.
right.
And me personally, the thing that concerns me is that it seems to be a pump and dump as you do with stocks. That I haven't heard that term used when they're talking to crypto or talking about crypto or Bitcoin, but that really seems to be the play that's going on here. I'm concerned about certain foreign governments are pumping up the price of Bitcoin anonymously, and then everybody's looking at the appreciation saying, oh, I need to get involved in this. And it's scary, it's dangerous, but that's for people who are really focused on the financials and figuring out the numbers. And I got to tell you, for this next part here, for the first couple hundred chance encounter interviews, I didn't use this slide here, even though I really wanted to. The reason why I didn't is because I know that some people in this industry, they are the public relations, they're the front of house type of person of the organization, and they're not going to be the people who are up to their eyeballs in spreadsheets and tweaking different numbers, doing different stress tests, and understanding what every single metric really boils down to as far as their projections go. But even if you are just the pretty face, if you will, of the business, then you still will have a few different metrics that you'll focus and hone in on. And for anybody in the audience who's only listening and not watching, I read out all 14 of these different metrics. This is not an exhaustive list. There are some other metrics that people really rely on, but here are the ones that I have on here, and maybe we can do like a top three or something like that. They are
Okay.
cash on cash, IRR, cost per door, net operating income or NOI, the going in cap rate, which is really how much of a discount you're buying at right now, the loan interest rate, especially if you're going to be assuming a loan, the occupancy or vacancy rate, which are the same thing but just inverse, the average income where the property is located, the amortization period of the loan. It's especially important if you're going to be assuming a loan, the difference between the market versus the in-place rents, the population growth where the property is located, so you have some baked in appreciation from higher demand, the sponsor record, which is the number of deals that have gone full cycle and the number of deals that are on the go right now, the waterfall split or exit strategy, which is about what happens to your investment after your capital has been returned, then the DSCR, which is debt service coverage ratio, which is how much of the revenue from rent is going out the door immediately just to pay for the loan. So once again, that's not exhaustive. So if there's another number or two, feel free to use those. But what are your big ones there, Hutch?
Look, as I look at this, brother, and I think about the underwriting process, every single one of these matrix is important, right? Because some of these we're looking at our communication to our investors or our analysis of, I'll say risk tolerance for our investors before we present a deal to them. Also, we're talking about the sponsor's track record, and we're also talking about the market that a property is located in. So we can talk about this amazing IRR, the internal rate of return, which savvy investor used to balance the income or the income possibility or the time value of their capital among some different investments. That is a huge metrics for a lot of sophisticated investor. But when you start thinking about cash and cash return, and you have a person who is or a family who's investing in real estate because they're looking for cash flow, right? They're looking for that financial freedom, that creating the location freedom and time freedom that they're looking for. They're going to looking for cash and cash. The velocity of capital, they're looking for the IRR, right? Cost per door, net operating income is big. Okay, this is how we generate actually money for the property,
Mm-hmm.
right? So we talk about the going in cap rate. Now that is a big distraction for a lot of people because they look at a deal and say, okay, what cap rate is the market at and what cap rate am I buying this property at? What a lot of folks don't do, they don't, especially less experienced folks, they're not thinking about where will this property be whenever I implement the business plan and get this property stabilized, because that metrics is important as well. Because if you're going to take you 6 months to one, reduce expenses, or even just like one of our best in class operators did recently by reducing the taxes for this property significantly on day one, the property cash flow. So we took the property from a 5 plus cap rate to a 6 plus cap rate day one by reducing the taxes significantly, right? So your going in cap rate is a little bit lower, and but your stabilized cap rate is significantly higher. And I think if you can weather the storm or raise enough capital to ensure the deal, the deal is proper, the business plan is properly implemented to get you to your stabilized cap rate in a short period of time, then the going in cap rate is not that big of a deal, right? But it's definitely serve as a matrix to gauge where you buy in that specific market. And of course, the cap rate in relation to the loan interest rate matters, right? Now, occupancy is one of those big ones that we look at. If we buy a property that's stabilized over 90%, and there's a property, we have the property management in-house or in the market that can increase, that was very versed in increasing the occupancy, then we know that is a problem that we can fix in a very timely manner. So a lot of these metrics make sense, and I can go to them one by one, but it's also it has to do with, are you looking at a deal? Are you looking at the funding? Are you looking at the sponsor? And how does all that ties in for giving a return to your investors? Yes,
Absolutely.
sir.
It's not that simple. There's
It's
lots
not.
of yeah, there's a lot to it, and I'm just eating up that answer like a delicious subscribe sandwich. It's pretty intense. But it's my reminder that it's time to bring out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. And more than anything else, I think that this is the tool that will help you more effectively communicate in the subject of commercial real estate deals and understand how people fit into those deals. And if you look at this cube and you think to yourself, wow, I really need to get me one of those. Well, the great news is it's absolutely free. You go to dandoesdeals.com. There's this big conspicuous looking button you can click on. It has a picture of it, and you can print it out and you can practice it on your friends and family. And I do confess I committed the cardinal sin of marketing, which is you should never, ever, ever give away your freebie without asking for some sort of contact information, like an email address or something like that. But it's that important to me that you have nothing in your way to printing this out and getting access to it, because I really think your ability to effectively communicate is going to dictate your future in this industry. Okay, you have to be able to be understood and get through a lot of stuff quickly. So let's go through those different sides. The most visible person in a commercial real estate deal is definitely the repositioner, because they're an acquisitions person. They're looking at a whole whack of different properties to figure out which one is worth acquiring, and the way that they're going to do that is by doing a whole whack of paperwork. They call it underwriting the deal, which means they're doing the math, they're doing the arithmetic, they're figuring out, first of all, is the property even making the amount of money that the seller slash broker claims it is? Because okay, there's really likely that they're playing some games with the numbers. Okay, so the repositioners, they're not just trying to find out this for trivial reasons. They're trying to figure out how can they change how the property is run to find more upside. And honestly, the most peculiar part of repositioners' daily activities has to be the fact that they spend a ton of times in financier or investor relations. There, you have to have a huge network of financiers, people who only deal with paper, money, and the owners of the property. You have to have lots of them in your network, because if the repositioner can secure a more advantageous loan, aka cheaper money, that goes straight to the profitability of the building. So that's why a disproportionately large amount of time as a repositioner is in financier relations. But the next place that a repositioner is going to look at the operations, stop those Benjamins from going down the toilet. But of course, operations, there's more to it than unclogging toilets and collecting rent and mowing lawns and shoveling snow if you're not in Hawaii. But the contributions that I bring to an operations team, there's a few of them. One of them is, of course, the web-based assets that I can build, all the different IT that's involved in websites and any social media or whatever. But the bigger one, there's some understanding that needs to be breached here as well, which is that I like to focus on bigger deals, 100 units or more. And most of that is just a function of, I don't know if you know this about me or not, but I'm from the internet. So for me to prove my worth in being involved in the operations is that you have to understand that vacancy is the enemy when it comes to real estate. And so somebody on the GP team is going to need some serious marketing chops to get those units filled, even if a third party property management company can't. So that's where I fit in when I'm on a GP team. But of course, there's only so much you can do as an operator to make it more efficient. So the next place that the repositioner will usually look is to get a contractor team involved to upgrade the property. Because if the next resident finds a place way nicer than the previous one, they will generally be happier to pay more in rent. But if only things were that simple. You can spend endless amounts of money on contractors. You can go ahead and gold plate the toilets if that's what you want to do, but you're not going to get a return on investment. And if you're like me, again, I'm from the internet, that means you need somebody who's a local, boots on the ground, who can be there in an hour or two, because that won't be me. But somebody has to keep an eye on the contractors, make sure they're not dragging their heels and they're not using subpar materials. And then, of course, also making sure that the operations team is doing what they're supposed to. Now, that sure sounds like I've put together a GP team to take over a building. So let's do a hypothetical to show what's missing. You become a repositioner. Let's say you're an engineer or an attorney or a physician or ex-military, something like that. And you say to yourself, hey, I know how to buy a house. You put down your deposit and then you borrow the rest from the bank. So you think, hey, I betcha if I pool my circle of friends, we each put in like 100K each or something like that, we could buy that 350 unit apartment complex that's just down the street. So you get it under contract, you turn around to the financiers and say, hey, I want to buy that building right there. It's tens of millions of dollars. Do you have, I don't know, say tens of millions of dollars you want to say, lend us? Well, there's a problem with that little plan here, which is the financiers are going to ask for one other person. And if you're in a mentorship program or you have a guru or something like that, I encourage you to listen very closely to this next part, because they tend to gloss over it pretty seriously. And that is, who's the sponsor? Who's the KP? What's that all about? The bank needs reassurance that you're not going to take the depositor's money in the form of a loan, buy this property, and then promptly run it into the ground. So they need to have somebody in the fold who already owns a similar asset, or else you're simply not going to be eligible for the loan. On top of that, you need a certain amount of liquidity. And then for collateral, among the ownership team, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So, Hutch,
Yes,
I know that you do a bunch of the repositioning work. You also do asset management in the operations, and of course, everybody's involved in financier relations. Which pieces of the puzzle, like, have I got that right, or do you want to add to what your contribution is going to be to your next deal?
now, what you're talking about, the information you pass is valid information for an investor. Now, it's valid for the active investor to understand the different teams or the different elements that's response the different elements that makes up that entire team, because that is important, right, for active investors, but also for passive investors to understand that this is a big operation. It's not just a one-man band where you can walk in there. If you walk in there with hundreds of millions of dollars, you can do some amazing things, right? And the financier or the bank or the lending institution might look the other way, right? About experience and a bunch of different things. If you've got hundreds of millions of dollars buying a $20 million property, but in most cases that is not factual, right? In most cases, especially the realm that we work in, is helping the everyday, I would say American, because most of our investors, well, all of our investors are American. Because I'm still in the military, so I don't mess with overseas investors because of clearance and a bunch of different obvious reasons, right? So my investors, we are helping the average American to towards owning more of America. That's what one of our slogan is: to help veterans own more of America. So helping them to understand that it takes a team and that we are committed to building this team. We are committed to traveling to different conferences. We're committed to waking up early in the morning, having these conversations to ensure that we continue to build our network of good people in the business, to ensure that the quality of asset that we bring into them can cash flow and is actually an investment, not just a speculation.
Mm-hmm.
So um, what I would like to get to in the not so distant future is to be a key principal. That is an amazing part of real estate investing. Imagine this, right? You have a balance sheet of, of $20 million, say $50 million, and you are able to, to partner with some of the best in class operators, and they come to you and come to me and they say, Hutch, I have this project, and you've been a passive investor with us for several years and several deals, right? So we have had this unique relationship. What we're looking for you right now is for you to be a key principal on this deal. We want to use your balance sheet. We also want to use your experience in real estate for this project. That is a really good place to be, because at some point I get to have no money in the deal, but I also get to control a small aspect of the deal, like small pieces of small slices of watermelon, I like to call it, instead of a whole full grape. So I want to get to the key principal role in the not so maybe 10 years or so. But for the meantime, I'm a passive investor and also active investor, and a asset manager as well. So I'm committed to building towards that end, and also assisting our veterans to get to that level as well. Probably not everyone wants to get to that level, but at least putting themselves in a financial position where that is possible.
I love that answer. And that brings us to the properties themselves, or the buy box. And
Yeah.
when real estate people are asking each other, hey, what you looking for? What's your buy box? What's your ideal property? We're really asking about three main things. The first one's geography. Where is it? Which state, which county, possibly even which neighborhood. It will absolutely matter. The second one's going to be size. Now, I mentioned before that I go for bigger multifamily properties myself. Part of it is because I'm from the internet, so that's something that I can do and actually have it make sense. But the reason why size is going to be so important, again, most of my guests on here are in multifamily, but this is going to be a consistent fact. The way you define size in multifamily is by the number of apartment units, and the type of team that would take over a 10 or 15 unit apartment complex. It's usually fundamentally different from the ones that take the 150, 350 unit apartment complexes, and that's why size is important, even though you're also going to have other types of real estate that go off of acreage or square footage,
Yeah.
but the same principle applies. Now, the third one, though, is usually called class. I prefer to use the term desirability. I think it's a little bit more informative, but the bigger thing is class is singular, and I'm a nerd when it comes to grammar, so I don't like using singular words that actually mean two things. When you're talking about desirability, it's split into condition and area. And so if you're talking about condition, it's how beat up is the property, how many luxuries and amenities are there, is it just a really no frills sort of place, or is it a place that you'd really, really want to live in? That's the condition, and how old it is, really, right? And then when you're talking about area, if it is residential like multifamily, then the school districts where the property is located is going to be very important for the desirability. Every type of real estate is going to matter what the crime rate is like. But to really bring area home, you have to remember the old saying, location, location, location.
Okay.
I'm not crazy about that trope because I don't think it's very informative. I think it should be traffic, 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 because if a gazillion people pass by a property every single day, it's going to have more baked in desirability for that reason alone. But
Yeah.
both the area and the condition are ranked the same way as in grade school, where you have A plus at the top, then A minus, then B plus, and so on. So, Hutch, as far as the buy box goes, what's easier for your group to say yes to?
B class property
Hmm.
in maybe a B plus or A class area, right? So we have done some C class properties in the past, and it's, if you're in the military or a veteran, you listen to this, it's like trying to turn around an aircraft carrier, right? It takes time, right? You can't just whip that thing around. So you buy a 100+ units in a C class, in a solid C class environment, right, with solid C class resident, and it's going to be challenging to get that to a C plus or a B class property, right? It's probably going to stay a C class, and that has its own challenges, so we're looking more towards B class properties. That's probably in a B plus or A class area, right? That is a solid yes, But if a property is in a location that has really good fundamentals, where there's a lot of jobs coming to the area, it might not be a lot of tech jobs, right? But a lot of development jobs, new schools, so on and so forth in the area that attract maybe the middle class family or middle class income family, then we might consider a C-class property. And of course, with also a good operator in that with good boots and ground in that area that demonstrated that they are able to reposition or improve the quality of an asset and also the operation, because you can make some money in pretty much any sector, right? For example, a lot of us would not invest in mobile home parks, and mobile home parks is a cash cow, right? Mobile home parks, RV parks, those are a cash cow, right? And if your operation is good, you have the right team in place, the right construction team in place to address its septic issue. If you buy an older park, you can make some serious money because you're solving some serious problems in those parks. So location is important, but it comes down to the operator and their demonstration of previous performance in comparable assets.
I love that answer. So let's talk about people then, because that's the deals. And my favorite part by far about commercial real estate is the community itself. We're so eager to make referrals, introductions, and whatnot. And I think most of the reason for that, if we're going to be really blunt about it, is because it's such a multifaceted industry. It's nobody's going to be all six sides of the cube for any
Right.
meaningful amount of time. You're going to hunker down on a couple of different sides and just become an expert at those instead. But because of that, and sure, all of us have our own unique skill set, we're going to be better suited to help some people more than others. Now, of course, everybody in this industry is in the business of deploying capital ultimately, so those financier relations are going to be huge. Me personally, because of my marketing background, my tech background, all this different infrastructure, the sponsors and KPs I'm generally most eager to speak to, just because they've
Yeah.
already got that established business where I can make a difference. And then, of course, me being on this show means that I need to talk to all walks of life in this industry. But Hutch, as far as you're concerned, make sure you don't mention any 506B deals if you got any specifically, especially if you talk about investors. But who's in the audience that you can help the most?
Like, look, if you are a retired veteran, an accredited investor that own a small business, you are the ideal person that I want to talk to. But no, but we have some, we will be acquiring 506B deals where we need to have a pre-existing relationship. And for those deals, we can take in some non-accredited investor. So if you are a veteran that, want to venture into investing in real estate, and you have the risk tolerance and the risk capacity, and we can talk about that on a phone call or a Zoom call, then there's a possibility that you could be one of the 35 people in the 506B syndication. But of course, to Dan's point, we have to have the pre-existing relationship, and not just pre-existing relationship. We have to talk about, real estate and investing, and your understanding of the sector, your understanding of money, and also your long-term goals, and how does real estate really fit into that long-term goal, and ensuring that you're not investing your last $50,000, right? And you are barely surviving. So your risk tolerance and your risk capacity are things that we talk about on the on the call. But for me, one of the things that I focus on a daily basis is continuously building those relationships with passive investors. And I'm also building relationship with active operators in a different market. And this is ensure that we can bring a diverse market of investment or diverse investment to our investors, or options for our investors. We've been primarily focused in the Southeast and Texas, but we are building relationship with other market as well.
I love that answer. And so there
Yeah.
must be people out there going, "Hey, I really need to get a hold of you then." So the good news is, we both have some pretty unique names. Mine's really distinct. So it makes it really easy to find me on LinkedIn, which is where I spend most of my social media time. Of course, if you're on Amazon.com, I have a few different books on business related skills, including real estate syndication, available on Amazon.com. But if you are going to be getting involved in investments, or you are a syndicator, as far as all of my IT experience goes, I encourage you to scan this QR code. You can pause the video and just use your phone to scan it. That will bring you to the FAQs page of 506BME, which is the platform where I offer that affordable service of backing up and maintaining your documentation of your substantive investor relations. The idea being is that even if your laptop falls into the bathtub, the SEC is still going to need some sort of documentation of your substantive relations business, or else they're going to assume that you didn't have them and they're going to yank your exemption, and that could completely destroy your business. So I really encourage you, one way or another, make sure you get that documentation done, just as Hutch was mentioning. But Hutch, if people want to reach out to you, you got your H squared capital. As far as like website, social media, email, how should people reach out?
Yeah, so one of the best things to do to ensure that you are kept in a loop, or actually just to get the conversation started, is to go to hsquaredcapital.com and download your operations manual. I'm also working on a a guide. I won't talk about the names until we actually get it published. It's a guide for passive investors to perform due diligence, and it's 87 pages, so it's a short read, but it's some of the top questions. So it gives you some of the top questions that you should be asking your operators to get a better understanding of, to Dan's point, building a relationship, but also understanding their operation. So you yourself, as a passive investor, can make your own risk decision of the operators, understanding of the deal, understanding of the market, and also understanding of the financing that's surrounding that deal. So you can go to hqcapital.com and download the operations manual. Now, if you are prominent on LinkedIn, I'm there every day. You can connect with me on LinkedIn at Hutch the Marine Investor, and jump in a DM, and we can start having these conversations towards developing a pre-existing relationship. And let's talk money. It's a topic that it's taboo amongst a lot of Americans. Don't talk about money, don't talk about how much you have. But look, one of the things that I've learned from my good friend Bill Allen. We was networking down in Pensacola. He said, "Hutch, I love talking about money." And one of the things he brought up is that the more rich people that he talked to, more people that has this abundance mindset and have money, they want to talk about money. They want to educate people on how it works. Because one of the things he brought up in the conversation, he said, "Hutch, money has to keep flowing. And this is why they call it currency." So the better relationship we have with it, it's the more the more we figure out how we can make it work harder for us, harder than we worked for it. So let's connect on LinkedIn, and let's talk about how we can build a mutually beneficial relationship around our understanding of the way capital is supposed to work in this environment.
I love that answer. And that brings me to the public service announcement. It's the only thing left. It's actually not for you, Hutch. It's for you in the audience. If you've been watching this episode and experiencing searing pains in your eyeballs, like migraine-like symptoms, I'm confident it's because of the downright hideous subscribe button that you can get rid of for free. It's just right. You could just, did, and it like costs you nothing. Full disclosure, I want lots and lots of people to click on it, because if they do, YouTube will actually start to pay for these videos instead of me, and I think that would be fantastic. The trade-off for you, just so we're clear, is my videos may show up on your list of suggestions, but quite frankly, you can go ahead and ignore those suggestions. I just really appreciate the fact that you spent this time with me. Just like Hutch, I appreciate you joining me. This has been great.
I appreciate the opportunity, my brother. It's great seeing you out in Phoenix as well.
For sure, man. That was awesome.
Yes, sir.
Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, and all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Make sure you 506B me. Any syndicators, make sure you 506B me. Hi. Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.